With chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, December 6th, 2024. I had 1 million people tell me they're tuning in this week. I wish I could say shout out to every single one. You know what? I'm just going to give it a shot. So shout out to Karen, Rich, Esther, Tony, Sue, Cameron, Bob, Diane, Jim, Sherry, Champ, so on and so forth, and so many others. Thank you all for tuning in, checking our show out week in and week out. We are happy that we're bringing something to the table for you. So let's go ahead and jump into the numbers, tell you what is going on this week. A bit of a mixed bag. The Dow Jones Industrial Average down about 0.5% this week, down 0.5. S&P 500 up about 1%. NASDAQ Composite, got all your growth stocks, tech stocks, that sort of thing, up big time this week, up 3.3% this week for the NASDAQ. And the Russell Small Cap Index down 1%. We'll talk a little bit more about these things in just a moment. Taking a look at the Volatility Index, down 5.5%, down to a 12.7. A 12.7 on the VIX, the Volatility Index. And I know Tom, who I talk to every now and then, likes to watch the VIX now. Never watched it before. Now he's pays attention to that. So that's a very complacent number, 12.7. I had someone ask me this week, David, why does the market keep going up? Well, I tell you, I think it's just a year-end chase. When you look at the indicators, like I've got these short-term indicators, they are just screaming. They are screaming that this market is a bit overextended. And we're seeing all this complacency in the volatility index, markets screaming that it's overextended. I would just say, let's tread lightly moving forward. Look, December tends to be a strong month. It's actually up 100% of the time during presidential election years when the market was up over 10% halfway. And we were up over 10% halfway through this year, and it's a presidential election year. So again, we expect December to be positive. All of that said, what we're seeing right now, looking at the NASDAQ up 3.3%, you look at the sectors within the market this week, it was tech. It was technology up 3%, communication services, Facebook, thank you very much, up 2.5%. Semiconductors came back a bit this week. They were up 2.5%. But listen to this. Things like utilities were down 3.9%, energy down 4.7%, financials down 1.8%, healthcare down 2%, industrials down 2.3%, materials down 3%. You talk about a mixed bag. It was definitely mixed this week, but the tech sector really showing everyone the love and some consumer discretionary because you had some retail names like Lululemon and Ulta Beauty. Doggone it. Farah Dill, she is the daughter of our awesome operations manager, Carol Dill. Farah has told me, buy Ulta Beauty. And I was like, okay, I will if it gets down to my price target. Well, doggone it. It didn't get down there. And now it's taken off again. I missed it, Farah. It's up just this week alone, 10.7%. So, hey, maybe it'll come back down and get another shot at it. But anyway, my point being, outside of some retail names that had a really solid week from earnings, we're really seeing the market chasing the names that have been strong throughout the year. And you tend to see that towards the end of a year. And what happens is this, you get money managers out there that didn't do that well, didn't perform very well, didn't have good selection in the portfolio, whatever the case may be. And they've got to answer to their clients, right? Going into 2025. So what they try to do is they try to buy all the winners that they didn't own throughout the year and stick them in their portfolio. So when people ask them, why didn't you have this? Well, yeah, I do have it. It's right there. It makes no sense to me, folks. I don't know what to tell you. That's just what they tend to do. We don't chase around here. We'd rather be early and get ahead of the moves than to be late and pick them up after the fact. Look at some other things. Gold was down 1%, silver up 1.1%, so mixed there on the metals. So what's moving markets? Well, again, we had some retail earnings, and they were solid. We saw the numbers there, as I just mentioned. You've got economic news, which has been mixed, but to the positive side. Look, we had a strong jobs number today. We got the November jobs number. It was above expectations, like 227,000 jobs. We also had upward revisions for prior jobs numbers. So the labor market's looking really strong. One of my concerns was the unemployment level, though, did tick up another 0.1%. So we're up to 4.2%. Look, there's a lot of things out there. There is a lot of contradictory data, right? There's some things that definitely kind of have my attention to the things to worry about side of the equation. But the market continues to be very constructive, continues to want to go higher, chalk it up to seasonality, chalk it up to people feeling good about what the future holds, et cetera, et cetera. But right now, we're going to remain cautious. So like for folks that have new money, new clients that have come on board, we are being very selective about what we buy. We're only picking up things that are down and out for whatever reason. So you'll notice that your money's just not getting dumped right into this market, hitting all-time highs, when we've got all of these indicators just screaming overbought, right? So we're just taking our time, letting the market come to us. No need to chase it. I like where things stand with all of that. So what's ahead for us? Well, we got some data next week. CPI, Consumer Price Index, PPI, Producer Price Index. Those are some big inflation numbers that the market's going to be watching. You know, the big question is, what is the Fed going to do, right? They have another announcement here in 2 weeks. Will they lower rates again by another quarter point? Will they hold? I think the market's expecting another cut. When some of these economic indicators look as strong as they do, and the market's running as hot as it is, you kind of scratch your head on that a little bit, them cutting rates yet again. On the other hand, when you look at how much interest we're paying on the national debt and the fact that we've got to grow our way out of this, another cut's certainly not going to hurt anything in that regard. Now, you know, the big question, the big fear is, will inflation come back? It's looking like we're getting pressed down here into the 2 range, 2%, high 2s on inflation numbers. That's a good place to be. It's a real good place to be. We've really gotten it down quite a bit. There's definitely the danger that it can work its way back up again. But I think we've got a little bit of time here before we have to worry too much about that. So we'll see what the Fed does. They may cut again and they may hold. If they hold, I think the market will be a bit taken off sides with that move. And I think you'll see the market react a bit negatively. But we'll see. We'll see what they do. For right now, I like where things stand for us. 2025, a different story. We'll talk more about it in coming weeks, working on preparations for 2025 as we speak. Right now, we're trying to minimize any additional moves that are going to generate tax consequences. So really looking for January 1st to come and go so we can trim back on some of these big gains and do some repositioning. So with all of that said, between now and next we meet, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money, maybe it is get all new electronics for your boat. Yeah, and get a great deal on them at that. Shout out to a friend of mine. Hey, maybe it is take that big trip, retire a little early, or put kids through college. Hey, look, you know what your goals are. Don't just think about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.